What am I actually expecting? Again, we've been forecasting a fake out of the outer structure, 1, 2, and 3. Price is now closed back inside the channel, and obviously once price closes inside the channel, tapped a level of liquidity which was found on the smaller time frame to the left. I'm now expecting price to decline to retest the outer structure of the bottom channel. Now, how did price close back inside the channel? With some momentum, small correction, flag, momentum again, formed a larger flag of the pattern, and now a continuation to the downside. So now we have momentum to the downside. What's happened next? So let's zoom in to the smaller time frames. We can now see that price is currently forming a complex pullback. Think about it, it's breaking out the lows, complex correction with momentum. Now all of this is just a complex correction. We can see some equal highs which we forecasted on yesterday's session, and now price has formed an expanding pattern, as you can see. What I like about this particular setup is that there's currently some equal highs here to the left and some unfilled liquidity on the smaller time frames. So I'm expecting a strong decline to minimum this take profit as a take profit 1 on the DXY, and further downside to take out these lows for today's Friday session. The long-term targets would be here, where I'll be banking a potential Euro USD long position. So that's the game plan for the DXY. Obviously further downside, if we zoom out, you know, there is a lot more room to the downside to retest the outer structure, but I'm not really interested in holding trades long term. Normally just bank at take profit 1. The rest of the position I'll be leaving at 20% running. So that's the game plan for the DXY. Next on the list is dollar yen. Okay, so dollar yen was a trade again we forecasted in the mastermind group. So what have we got? We zoom out to the daily time frame. We can see that there was 2 levels of liquidity as a plan B. On the smaller time frame, there was a level that got tapped. Also, think about it, there's been compression to the upside on the 4-hour time frame. This compression then extended to a wider compression of the same pattern. So you need to separate the pattern. It's called pattern separation. So you need to focus on the most relevant piece of price action. So this bank level here triggered, it made new lows, as you can see here to the left. So let's see how we actually manage this trade. So okay, so this level triggered, price then consolidated, formed a bit of a head and shoulder. It rallied with momentum as a first confirmation for a downtrade. It then pulled back, formed an expanding pattern, and I saw some equal highs. I saw some unfilled liquidity here to the left. I got triggered in, fantastic trade. Take profit 1 was just below this low, and now I'm out. Obviously, once I've banked at take profit 1, which was 80% of the position, I trailed my stop loss, which was obviously originally around here, and I just placed it just above these highs, since obviously there was lots of spikes, lots of pin bars. So I thought, you know what, maybe it could reverse and take me out. So I left it there, very, very good trade. So that was the game plan for dollar yen. Pretty happy with it. In terms of getting involved now, there's nothing really clear at the moment. Nothing clear, so I'm not going to be trading it. Next on the list is Euro USD. Okay, so Euro USD, these were the trades taken in the live stream this week. So if we just zoom out to the daily time frame to see what's actually happening, we can see this particular pattern is a very powerful pattern. I call it the boomerang. The reason it's called the boomerang is because price comes back to the original pattern. Obviously, with a boomerang is a hunting tool used in Australia. It comes back to the thrower, hence why I call it the boomerang. So again, liquidity gets filled, which is a good entry. A better confirmation entry is a break and retest of the original pattern. So what have we currently have here? We have 1 tap, 2 tap, the 3rd tap, which is the fake out. It filled liquidity, rallied back inside, and it closed back inside, and I'm expecting some form of a retest. So all this faith is just accumulating lots of orders for a potential reversal. So let's go to the 4-hour time frame. What can we actually see? We can see price is currently in a bullish channel, I'm going to talk you through some of the setups that I took here on the smaller time frames. But right now, again, the same pattern is happening. We can see one tap, two tap, and normally on the third tap, there's a little bit of a fake out, close back inside, and I'm expecting a rally to at least these potential unfilled liquidity levels. Obviously, longer time frame now, there's a further take profit. I'm not really looking to be holding trades that long. I prefer taking profit at TP1. So let's build a better case study on the 1 hour time frame. So what can we see now? My original first entry was this one here, which was forecasted in the group. So again, I saw some equal highs. I saw the third tap of the trend line. Now what can we see? One tap, two tap, and this third tap was in confluence with some unfilled liquidity on the smaller time frames. So I set my order knowing this pattern is very reliable, and you know, it was a good trade. 6R came out at a bank level, reversed a tiny bit, and it just kept on dropping, and it tapped the outer structure. So that was the thought process on this trade. Then a few days later, this week, we can delete this now. Obviously, it's irrelevant. So then what happened next? I'm updating the pattern. Then I saw this potential setup, a retest of a zone here on the smaller time frame. So I set my order. It triggered, was in a bit of a profit for a while, but then it hit my stop loss. But I already forecasted a second scenario. So plan A completely failed, but it's fine. I also had plan B, which was somewhere around this point of interest. So it's always good to not be attached to one outcome. It's always good to mentally prepare for multiple scenarios, so you're not really emotionally attached to a trade. So this is why I don't really mind taking losses, and especially with my RR. So it's all about forecasting multiple positions. Don't really get fixated on an outcome, which means you're not going to be emotionally attached to a trade. Just prepare and visualize a loss, and it's going to make your psychology bulletproof, to be honest. So that was the thought process on this trade. It was a low probability trade, but it's fine. Every now and again, these trades do rally hard, especially after this momentum, but it's fine. But now, what is actually happening? So again, I'm still trading the same schematics. I've got some equal lows here, which has been triggered. On the smaller time frames, I've got some unfilled liquidity. So I've got my order set somewhere around here with a pretty decent risk reward. I also have some equal highs over here, which is something similar that happened here. As you can see, we had some equal highs, and we also had some equal lows. Price triggered, took out the highs, and then took out the lows. So there's always going to be a bit of a ping pong session between the institutions and retail traders. So this is the thought process that I'm taking with Euro USD. So again, I've got some equal lows and some equal highs. So I'm expecting now with Euro USD, since there's a double bottom here, right? Many traders are trading this double bottom, obviously. So, okay, cool. They'll be trading it. Once they're trading it now, they're not only going to get stopped out, but also these sellers will get stopped out. So again, these sellers now, the break and retest, sellers will be selling this market, but there is a nice potential trap here where both buyers and sellers will get stopped out and go long and tap liquidity on the other side. And I'll be looking to bank profit at take profit 1 at 80% and leave the 20% running to take profit 2. So that's the game plan for Euro USD. Next on the list is Euro Pound. Okay, so Euro Pound, only one trade was taken. It was a pretty decent one. So what happened? Let's just zoom out to the daily time frame to build a better case study. So what's happened with Euro Pound? Again, the same schematic, but on a much bigger time scale. So again, we've got some equal lows, a swing low. Everything has been taken out. Liquidity has been filled on a smaller time frame. I'm also prepared that if I'm wrong here, I've taken one loss, but I've taken a few wins as well. But I'm also prepared that if this completely fails, then I'm prepared for a larger liquidity to be filled somewhere here within the daily time frame. So I'm also, I'm not fixated on one outcome. I'm not going to be stubborn and think, okay, if it's not going to reverse from me, I'm not going to be trading it. No, it doesn't work like that. You need to forecast multiple scenarios. So again, we've got compression to the downside. We've got the equal lows. Liquidity has been filled. Price is back inside the pattern. Once price does eventually rally, I'll be expecting a long-term trade towards these equal highs on the smaller time frame. There's some equal highs here on the, let me just double check here. So there's some equal highs here on the 1 hour time frame. So I'll be expecting to tap liquidity somewhere just above it. The reason this is the long-term target, I'll be trading, I'll be buying and selling the market on the way up. But the reason that's the main target is because this was the main swing low that took out these equal lows and this compression to the upside. So I am expecting a strong rally to the upside. So let's zoom in to the smaller time frame. So on the 4 hour, what can we actually see? Okay, liquidity has been filled. There were some equal lows. Tap liquidity, it rallied, kept on rallying, dropped. On the 1 hour time frame, the most recent trade that I took was actually this one here. Again, okay, so we've got the equal lows, rallied, pulled back. I had my order set just above this liquidity, 2 pips below, 2 pips above, and I decided to close it once I saw this bearish engulfing. Why is that? So as you can see, the way price approaches my levels is very, very important. So there's 2 ways you can approach it. Let me just do this again. Market structure is so important. So again, we've got momentum, a correction, and let me just add this flag, which is this last pattern. So there's one candle. Just focus on this one bearish candle. So I saw momentum, then I saw a correction. What's followed next after a correction, which was the previous trend? So momentum, correction, there's likely to be a momentum to the downside, especially after seeing this bearish engulfing. Once I saw that, I decided to close the trade, knowing, hold on a minute, there's some equal lows. It's likely to take out this low here. Fortunately, I did, because once I closed my order, I would have definitely got stopped out. So that's one occasion on how you can protect your capital. Obviously, if I see some compression / correction where it's tilted this way, such as this move here, I know there's a bigger chance of it rallying to the upside. So if this happened here, I would have left my order. So depending on how price approaches your levels is very, very important. Again, you don't want to be fixated on one outcome. So if I send my order, if I've got a mechanical strategy and I leave it, then I'll be losing lots of trades if I'm not conscious about how price is approaching my order. So you need to always adapt and take a message from the markets. So that was the game plan and the preserved capital on euro pound. So right now I've got this potential setup. It's triggered again, we've got some equal lows, 1, second low, liquidity has been filled below. There's a retest, but I'm not looking to get involved as I'm more interested in a euro long. However, if we do get some sort of a rally to take out these equal highs, then I'll be catching a retest, look to the left for some unfilled liquidity and a long-term position to retest this level here, which is in confluence with some equal highs. So that's the game plan for euro pound. Next on the list is Kiwi dollar. So Kiwi dollar was another trade that we forecasted. Again, let's just zoom out to the daily time frame to build a bigger case study. So what's actually happening? Okay, so some unfilled liquidity has been filled now. Think about it. There's been some equal highs, nice clear double top. Also some equal highs here. Liquidity has been filled. Traders have been stopped out. Price has now declined with momentum and it's likely to approach the outer structure of this pattern. So I'm looking for sell setups on the way down. And what can we see on the 4 hour? Again, we've got a nice bearish flag, we've got momentum, bearish flag, momentum, then an expanding correction, which takes a while. And I'm expecting, once I saw this accumulation phase over here, I thought to myself, hold on a minute, there's some equal highs here. As you can see, there's some equal highs. So once price closes just above it, where is the next possible level of interest? It had 2 levels here on the smaller time frames. Also, we look to the left, there's some unfilled liquidity, which is in confluence with a third tap of this outer structure. So on the 1 hour time frame, what did we see? We saw this phase, price continued to rally. I was not really expecting this, but I just set my order. And you know, I got triggered, stop losses above, price did just continue to drop. I had also had an order just above these equal highs at this level, but price never really reached it, so I cancelled that order. And that's the only time I'll be adding entries if once my original trade is on break even, which it is. So now price is currently just messing around here. I think what I'm gonna do is, because it's messing around, there is also a chance of maybe my original second entry setup coming into fruition. So if that's the case, I'm going to adapt to the market and probably close 70-80% of my trade, sit this one on break even, and then re-enter this order. So again, you need to constantly adapt. You can't just be stubborn or fixated on one outcome. So this is an example of how you can really manage a trade. So I'm looking to close most of this trade and then again set a second order, and we'll see what happens. But I don't like the consolidation that's happening here. I was expecting a further strong decline. So I'm taking a message from the market. There's actually a chance of this small demand level being invalid. So, you know, I'm not going to be forcing the market. The market's telling me it's respecting this demand level. I might as well just bank some of this position, which is fine. You know, it's still a free for all. So that's the game plan for New Zealand CAD. So that's it for today, guys. Hopefully you guys enjoyed it. I'll see you guys next week. Take care, everybody. Bye-bye.